everybody, welcome to this overview of Renko. I'm just going to start straight off the bat and say that I have no script for this. I'm just doing it off the top of my head as I'm looking at a chart. With that in mind, there's going to be some periods of awkward silence, me tripping over my words, me sounding not very professional. Okay, so just roll with it, acknowledge that it's going to happen. All right, and then we can both get through that cringiness together. Second thing is my newborn baby is asleep on the desk next to me, so you may hear some baby noises or murmurs, so please don't be alarmed when you're listening to this back. Everything is Gucci, and obviously if there is any major disturbance or kickoff with baby Shiller, then I will pause the video and hop back in as soon as that is resolved. So I am just going to go through the agenda that I posted out on Twitter. So I just put together a list of 4 topics that I wanted to cover, and I want to keep this video relatively short. I've got a nasty habit of speaking for way too long on streams and other videos that I've done. So I want to really make an effort to keep this quite concise. So the 4 topics are what Renko is, traditional versus ATR settings and what they represent on a Renko chart, the advantages of Renko and the disadvantages of Renko. So obviously no approach is perfect, and Renko is certainly in that not perfect category. I'm just going to go straight in with what is Renko. You can see on screen at the moment I have the Bitcoin BitMEX 1-day chart, which uses the ATR 14 settings for painting Renko bricks. White bricks dictate an uptrend, and black bricks dictate a downtrend. Simplistically, Renko is a trend-based system. What it does is it filters out small, insignificant, I'm doing air quotes as I say that, insignificant price movement, and instead leaves you with the truest possible picture of a trend. So in itself, that's kind of one of the advantages of Renko. All right, it strips back choppiness, it reduces ranging markets, and it gives you a clear picture and direction of price, or underlying direction of price. Okay, so that is a very basic overview. The other thing to keep in mind is that Renko basically gives no shits about time. All right, everything to do with Renko is about price. This down here is horrendously skewed. And the reason is that there's no fixed printing with Renko. Unlike a candlestick chart where we have, depending on the time frame, right, we have a candle print regardless of price action. We have a candle print depending on the time frame that we have selected. With Renko, time just doesn't apply. The only time that bricks are printed is when a price target has been reached. So in that way, you can see that this whole from 2017 to where we are now in 2019, okay, that's how the Renko chart looks. If we take the comparison over to Bitcoin, okay, daily here, okay, obviously we've got a massively different picture here. So just a fast stripped back version on Renko. Removes this insignificant price and also doesn't have this nice chronological axis down the bottom here with equal spacing in between every print on here. Okay, so Renko does not care about price, about time one bit. Okay, so let's dive into the 2 settings that are available to you in TradingView. You have ATR, which is the average true range, and you have traditional. I'm actually going to start with traditional. And already just selecting that, you can see the impact that that's had on this daily chart behind me. So what I'll do is I will just close this down. I'll take it to the 10-minute time frame because this is kind of where I use it. So I may as well give you the example on the 10-minute. So the traditional settings. So what are the traditional settings saying to us? If we take a look at the box size here, the box size I want you to think about as a dollar amount. So when it comes to trading Bitcoin or Ethereum, which I primarily use traditional Renko settings for, this is referring to a dollar amount. So what I'm saying with these settings are every $10 that price moves, print a new brick for me. So each one of these bricks is $10 of price movement. $10 up, $10 up, $10 up. And then here we've got a small reversal, so we do the opposite, obviously, is applied. Now, I just kind of had this say about time not meaning anything when it comes to Renko. This is where time does make a difference in Renko, and this is something that people tend to overlook. Okay, so when we are looking at a traditional Renko settings, okay, we're looking at two things that need to happen. Number one is that price moves to the specified amount, right, which is our box size, as we just looked at. So in this instance, it's $10. In order to print those bricks, a second condition has to be met. And the second condition is that the time frame being viewed has to have a close. All right. So if we think about where we are now in the 10-minute, okay, what this patch here is signifying to us is that price moved however many $10 bricks in a 10-minute time frame. So a little bit like a candlestick chart, every 10 minutes, Renko almost cycles through a close. And however many movements or however much movement there has been in price in that window is locked in and printed and confirmed once that time frame has been closed out. So time down the bottom doesn't matter, because for instance we can have a 10-minute close where there's just not a $10 movement in price. And so that's where this time down the bottom doesn't matter, but the time frame that we're on still has some importance to when this information is actually printed. This is super difficult when not having a script and not being on stream to ask questions on whether or not that's understood, because I appreciate I talk very quickly through this. If there are any questions on what I'm covering off and it doesn't feel like it's clear enough to you, then just shoot me a DM on Twitter and I will happily answer questions on it. As I was going through that, I thought I must mention another thing when it comes to price and movement. All right, I'm sure it will come back to me. So they're the settings behind traditional and the traditional setup. Now I'm primarily using this on lower time frame. I'm primarily using this on the 10-minute. This is my scalping approach. It is choppier than an ATR chart would be for the same range, and we'll see that in a second when I swap over. This is a choppier way to view price. However, it gives me more information that I need in order to scalp a range like this. So for me, 10-minute time frame, traditional 10 works really well right now for Bitcoin. Other thing to mention is how I come to the figure, I guess, of traditional 10. So I tend to take for Bitcoin, 0.1% of Bitcoin value becomes the traditional value that I use on the chart. I round that figure up, so when Bitcoin's at high 9s, we'll just round that up to 10. When we move up, as we are now, 10.4, 10.5, then I will put that up to 11. So I just use 0.1% of Bitcoin value. If I am charting ETH, then I will use 0.2 as the value. That seems to give me the right amount of information that I'm happy with. But please feel free, if you want to check out Renko and start messing around with some charts, feel free to throw in whatever traditional figure you want to in there. Right? This is just a sandbox. You can just go crazy and just see what works for you. On higher time frames, you want to use a higher traditional figure. So if you're shifting up to the hourly, it's probably more important for you to have a bigger block of price represented on the hourly than it is to have those $10 movements. Like, you may want to look at something like a $30 movement in the hour. So just have a play around with the settings and what works for you during that. I'm just running through like a mental checklist about if there's anything else I need to cover for traditional. If there is, and that one point that I forgot before is bugging me, then I will come back to this. But I'll switch over to ATR and we can look at some of the differences. So if we see this range here that we've been in over the weekend, just before the weekend, we flick over to ATR. Right, so immediately, like, here's where we are. Okay, so that whole area that we just looked at has now just shifted to this. So ATR just eliminates so much of the noise. However, there are some underlying issues with ATR. But first, it's probably good to give you an explanation of what ATR actually is and how it is applying to the chart itself. That will also give you some of the disadvantages of ATR. So let's just hop straight into that. Okay, so ATR, average true range, essentially what it means is that we want the size of the Renko bricks to adjust to a typical price movement over a specific period of time. So here, the look back period is 14. So what essentially is happening is we are looking back over 14 periods, looking at what the average movement in price is, and then applying that figure to every single brick on this entire chart. Okay, so what that does is it gives us a really nice stripped back version of price. It looks back over the last 14 periods and gives us a figure that is representative of that range. The major downside that it has is that it applies that information to everything that's happened prior as well. The reason you will see this as being a problem is, for example, if I just go and stick in this, and I'm just going to say that this is support, okay? This is a support line. It doesn't have to be particularly clean for the purposes of this example. But this support line here, this price above it will change when the ATR value changes, because all of these bricks will repaint. So when you've heard the term repainting before, it's referring to the way that ATR repaints the entire chart based on the information that it takes from the range. So things like your support and resistance lines will be thrown out. You'll still have a general, they might still be in the general area, but you might find that you lined it up really nicely with a couple of bounces on support. The next time you come to look at that chart, your support line may look like it's just fallen off price. Right? And that's because all of these bricks are repainting. Now, where ATR really comes into its own is during trends. So on higher time frame, I am a big advocate of using ATR. ATR smooths out all of the trends and just makes it super easy to follow. All right, so what I'll do is I'll add a super guppy in. So you can just use the CM super guppy. Let's take this one. So the CM super guppy. And then you can see the way that price with Renko and the super guppy just enters these really nice trends that you can ride. So if you're interested in trend trading, I would highly recommend pairing Renko with a super guppy to take a look at this. Even on lower time frame, we can see these really nice trends that we can scalp and just move into nice swing positions across a few days here. Like, this is a week-long trade, but just a really simple one. Below a moving average, staying in the red guppy all the way along, and that would be a nice short trade here. One of the best examples for this is Ripple. Okay, so if I take Ripple on like a 12-hour, okay. So this here is the start of the year. This is start of 2019, January. We got the downtrend confirmation on Ripple moving below the EMA here, retesting the top of the guppy and failing, red guppy, and then here's the downtrend. Right, so that's now entering 9 months of downtrend. And you could have captured everything with a Renko ATR chart. The reason that ATR is more powerful on a higher time frame is that the look back period of 14, for example, right, we're having less movement in those sort of regions. So ATR works incredibly well for trends and for hopping on a trend and for staying in a trend. I can show you the Bitcoin variant of this. Right, so like this is that whole run up that we've had recently. Okay, from when we broke above like 4K, 4.5 here. Okay, 2nd of April. Like, look how short that is on a Renko chart. But then here we've got the green guppy. We've now got the bounces on this EMA here. Right, and the uptrend remains intact as it currently is. And you can see on the 4 hour again. The Renko ATR captured this at 6K when it broke through this EMA. And then here we are riding this all the way up. So it makes it super clean and super easy to trade. I'm going to throw this off before I start getting too deep into strategy when I'm still trying to explain overview and basics. So that's ATR. Great on higher time frames, great for spotting trends, piss poor on lower time frames, and shit because it repaints. Alright, if you keep those things in mind, the repainting is going to affect you a lot more on lower time frame than it is on higher time frame. Okay. The other thing that you can do with Renko is you can select your Renko bricks to be printed on close or highs or lows. Okay, so if you select Renko bricks to print on close, it will only update if the price creates a new brick. So if, for example, we're using our traditional 10 as we were before, okay, and we know it needs to move $2 to print a new brick. If price closes above that $10 and we close our time frame, then we will print a new brick. If, for example, we move up $15, but at the end of the time frame we close at $9, we won't print a new brick. Okay. The other option you have is high or low. So if you have it set on high or low drawing, then it will draw new bricks as and when the relevant price is reached. So as soon as the $10 is hit, it will print a brick. It doesn't need that 10-minute backing. And that's one of the big advantages of NinjaTrader. That's why I typically do a lot of my charting for Renko at NinjaTrader, because that functionality is a lot cleaner there. All right, so let's move on. Let's take a look at the advantages. I'm going through this at a relatively decent pace. I'm still 18 minutes in. Man, I talked for way too long. So let me just quickly go through the advantages and the disadvantages. I'm aware that I've covered some of that off already in the discussions that I've just been having here. So one of the things is, the first advantage is it filters out the price movements on lower time frame and some of the choppiness. Now, if you're a trader that gets caught up in over analyzing ranges, periods of chop, then Renko is a really good tool to add to your toolkit, because what it will do is it will strip away that element for you. Some of the trades that we make are just really emotional trades based on what we view visually as happening to price based on candlesticks. So I'm sure that some of the guys in the group won't mind me saying this, but we often have discussions about people making reference to the fact that a chart looks bullish or bearish on a 5-minute because there's a wick or a large candle or whatever it may be. But it's simply because there's an attachment to the visual representation of that candle versus what price is actually doing. So Renko helps to eliminate some of that like emotional sort of war that you will have between changing your bias bullish or bearish based on just simply candle prints on lower time frame. So again, take a look at Renko if that's something that you have trouble with. I always refer to this as kind of like taking away some of the emotional analysis that we do in consolidation patches, and like it's essentially that's That's a far quicker way of saying it that would have saved me a minute of talking shit. Another advantage is it's very, very easy on Renko to spot highs and lows. Right, here's a high, here's a lower high, here's a lower high. Right, these are very clear peaks. So spotting highs and lows on Renko is awesome. One of the best things about Renko is the ability to spot these highs and lows. And the fact that price is also stripped back, again, gives us a very true picture of the highs and lows. Right, here's a low, here's a lower low, lower high. Okay, and we're holding this now. Other thing is support and resistance. Support and resistance is great on Renko because we have these nice clean stops. Okay, here. Let's delete these 3 lines first. I'm not going to go through plotting loads of support and resistance levels, but here, for example, we've got the touch of support, resistance, retest, fall away. And then up here, we're going to have a support level as well. Okay. So here, support, 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 break of support, back above, retest. Okay, so support and resistance is super clean on Renko. And another really big benefit of using it. Last advantage, and I covered it enough during the ATR talk, but this is a trend-based system. If you want to spot trends and early signs of trend reversal, Renko is a fantastic tool in order to do that. So let's just go on to the disadvantages very quickly. The advantage I gave you right at the start was that it removes some of the price noise, chop, ranging, etc. And that's actually a disadvantage as well. In some situations, there is actually vital information that we can gain from viewing a range, viewing the way that price is interacting with a certain level. And Renko doesn't give us the ability to do that, because if it doesn't print a brick, as far as Renko is concerned, it hasn't happened. And I've shared screenshots of this on Twitter previously, where people will post a chart that has a really long wick on it, and then you go and look at the same chart on Renko, and there just isn't any change in price. It just looks exactly the same, like nothing happened. But actually that wick and an event of that scale is vital information for us to have in our analysis. But Renko won't show you that. So as well as being an advantage, we also have to consider it as a disadvantage. And then the other disadvantages are the ATR repaints. It's going to give you a different view on lower time frames every time that 14 look back period, or whatever you set the look back period to, updates the values that are attached to the bricks. So that in itself is the fact that you look at a chart that the very next day is going to give you a different set of information is a huge disadvantage. But there are ways, like we've discussed, of overcoming that slightly. The other thing that is the last disadvantage of Renko is that sometimes your entry and exit can be a little bit harder to define. Because when we look at a chart like this, and we can see that one of these bricks here on this ATR chart, right, has currently is like $140, right, per brick. So that can be really difficult to try and get an entry. If I want to enter long right here, okay, like getting my entry in here and really tuning down to a level that would be a nice entry, the best possible entry, can be quite difficult to do on Renko. It's possible, but it's certainly more difficult than looking at a candlestick chart, finding a nice support and resistance retests, and hopping into a trade. So again, something to keep in mind, you have to work a little bit harder. The best advice I can give you is to use a Renko chart hand in hand with a candlestick chart. If you want to start looking at trends and the way to hop in on a trend, take a look at Renko, see what the trend's doing, try and identify some key support and resistance levels, and then hop into a candlestick chart and dial down and tune into where you can seek an entry for that potential position. And that's why I post candlestick charts and Renko to Twitter, because just because I primarily use Renko doesn't mean I can now be without a candlestick chart. Like, I absolutely cannot be. Is there anything else that I should cover off while I'm waffling to the end of this video? I should probably cover off reversals with you. That's an important factor of Renko, and I'll look at that on the traditional. So let's look at traditional 10 again, and look at this area. Okay, so like we said, right, white is uptrend, black is downtrend. It's quite common in Renko thinking to take the assumption that 3 bricks of the opposite colour is classed as a reversal. So uptrend 2 bricks, continuation, right? Uptrend 3 bricks means there is a change to this uptrend structure. Now that could mean that we enter a period of ranging or consolidation, but there has been a break in the structure. So we see it here. Strong uptrend, 3 brick reversal, right? And then period of slight downtrend, consolidation, resume. You see it here. Break down 3, break back above this high, continuation. And then here we get a 2 brick, so we would just stay in a position here and we go up again. 3 brick, didn't really happen this time, we just got the straight continuation, but I know we're diverging at this region. So when we look at bricks that are counter trend, 3 bricks are typically seen as a reversal point. 3 bricks are, for example, where I get nervous about scalp positions, because 3 bricks indicate to me that there is the high likelihood of a period of consolidation or chop or a reversal of the trend that I've been trading. The other thing to quickly give you a quick test on is, this is traditional 10, okay? So each one of the bricks is $10 in value. I'm going to make it like one of those school videos now where I say, have a think about this for just 1 second. How much does price need to move in order to paint this black brick here? So we've had this uptrend of $10, $10, $10, $10. And then how much does price need to move in order to paint this black brick here? And I'll just give you like 10 seconds just while I get sorted here. Just have a think about that. Alright. I mean, shit, that was cringy, right? But anyway, this is a really good activity, and I've done this in the group many times. This brick here requires a $20 move in price. Most people assume that it's a $10, but it isn't. And it also indicates why 3-bar reversals are significant in Renko. So if we think about this in what's actually happening to price contained within these bricks. If we're up here at 9799, right, what actually needs to happen is price needs to reverse a full $10 to get down to the bottom of this brick. It then needs to reverse another $10 to get down to the bottom of here. So actually it's a $20 move. It's $10 from the white brick all the way down to the bottom of the white brick, and it's another $10 to then print this fresh black brick here. So reversal bricks in Renko are seen as quite a powerful thing because they have to do double the amount of work than the trending brick needs to. So when the white brick is the trending brick and we get a black brick, that first brick has had to do double the amount of work of any of these in order to print. So that's why this is a stronger reversal signal for us using Renko charts. I hope that makes sense. I really do. It's so awkward not being able to ask if everybody's understanding. And the last thing I should probably cover off is wicks. So we have wicks on Renko in the same way that we have wicks on candlestick charts. It simply illustrates that price tried to move in one direction. It wasn't confirmed, usually because the time frame didn't close, and then price went in the other direction. So we can see here in this black brick, price actually came back above all the way. It came up like what's this? It's like $17 here, right? So it would have actually printed a fresh brick here, but it didn't. It actually got smacked back down and continued. But we have a wick to show us that price attempted to go in the opposite direction first, and then continued in the direction. Alright, so I'm hitting 30 minutes. I'm running the risk of going too wild with this now. Thank you very much for tuning in. I will obviously be hosting this now publicly. The strategy Renko videos where we look at lower time frame scalping techniques and strategies and implementation of higher time frame swing trade positions, building on positions, will all be available to group members. They won't be made public. And if you would like any more information about the group, where we run streams, huge amounts of educational content, then please just send me a DM on Twitter and I'll be happy to provide you with as much information as possible. But again, thank you very much for tuning in, listening to me talk for 30 minutes. I apologise if you cringe during this. I tried my best to keep it going without too many stutters or awkward pauses. And once again, thank you guys. I'll see you all very soon.